All right, everybody, how y'all doing? My name is Jeremy with Trade Life. I'm basically the founder of Trade Life. I teach people how to trade. I teach people. Give people advice on market situations and etc. Today, I'm here to show you guys basically what it's like trading in today's market. Maybe you have some info. Maybe you're a very beginner. You'll be able to take something from this and maybe go out and do your own research, or you can reach out to me or Be Well, and we'll be able to get you in the right direction. So with that being said, happy Juneteenth. Let's get started, right? All right. The points I'll be covering today is the different types of trading that we'll be getting into. There's a bunch of different types of trading that you can start and get into. If you are getting into any of those types of trading, you're going to need to learn market research. You're going to need to learn how to do that. Anything investment wise comes with some type of research. We also going to go against Japanese candlesticks, how important those are, that's the true indicator, and also what it's like trading in today's market. Is it worth it with everything going on? We'll find out. All right. All right. So the different types of trading I have here. You have the stock market, you have options trading, crypto, NFTs, Forex, ETFs. All of these are assets that puts money in your pocket. Some of them are traded differently than others. Some of them are more straightforward, some of them are more complicated. I always say find your niche. Everybody that gets into trading, somebody like my niche is Forex. I also have investments in crypto and the stock market and ETFs as well. But my main go-to to, like, if I want to make some money, it'll be Forex, because I know basically I do a lot of market research. That's my strong point, etc. So find your niche is very important. The next thing I'm going to talk about is market research. We just talked about how important it is to know what you're investing in, right? So what's some good market research? So here's some stock sources. When I mean stock sources, so this is ETFs, options trading, stocks, anything that categorizes that. You can find any of this information on the news, CNN, Fox, CNBC, all of those places. They run news all day, and they're guaranteed to show something that's going on in the market, whether it's political, whether it's something in the world that's going on, whether it's whatever it is, they show it, right? We also have ticker websites. Ticker websites are basically the websites you go to find the information for this stock or for this crypto unit or for this NFT, whatever. Ticker websites basically give you the information to know if you're gonna go ahead and go with your move. And I say this because a lot of people go and they talk about, hey, I'm pretty sure most of people here say, hey, man, go invest in Apple right now, bro. Like, it's going up, it's going crazy. Go invest in Yahoo right now, it's going crazy. Well, it's okay to do that, but a lot of those people don't do market research. A lot of those people, if you ask people what's the volume look like, or what's the price to income ratio, then they get kind of shook. They don't even know what that means. So my best advice to you is, when somebody tells you to invest in something and they looking like, hey man, you should invest in this, then this is the source you need to go to. Like, you need to watch the news. You need to find out, go to these websites. That's the fastest way to find out. And you go to these websites and you find out what's going on here, to where, is he telling the truth? Maybe it is going to go up, or maybe he just heard it from somebody else, right? And that's basically gets the FUD out the way. We call that FUD in the market. We don't want to deal with that, right? So websites would be Yahoo Finance, MarketWatch, CNBC, all Bloomberg.com, any of these .com websites to get you what you need to find out. We have some crypto sources here. This is ticker websites for crypto. It's the Coin Market Cap. You have CoinDesk, Crypto.com, YCharts. All these show crypto assets, what is going on with that asset at the time. And then we have Forex websites. You can look at TradingView, MetaTrader on your phone or on a computer. These show you charts and information about the websites. Global rates, I put that in caps because that's really a valuable source that a lot of people don't know about when it comes down to Forex. All right, so right here I have a ticker website. This is gonna basically show you what you need to know. Like, you're gonna go to this right here. I have an example of Apple, right? So somebody said, hey man, you should go invest in Apple, and then you go on Yahoo Finance and you look at Apple, right? And now you need to find out, you're gonna see all these numbers. I'm not gonna go through each and every last number here, but I'm going through a couple of points to kind of show you how you go about doing these things. You can easily go to Investopedia. You can book a session with Trade Life or Be Well to find out more information. So the first thing I'm going to look at is the volume. Let's start off with the volume, right? So the volume shows how many numbers of shares are being traded or contracts that are active in the stock. So these are, if I have one share of Apple, that's going to be added to that total, right? So that's basically the total number of circulation they have at one time. We look at volume because it shows growth, right? Increasing volume and in a stock is looked at as bullish. So when you see the volume increasing, for instance, you see it's 92, the volume is 92 million, right? And then the next day it's 120, and the next day it's 150. That stock is most likely going to go up. That stock is going to go crazy, right? Because there's all these people buying and buying and buying more shares of it. But there's also an exception to this. If prices fall on high volume, right? If prices fall on high volume, meaning you see the stock going down, but you see the volume going up, that means it shows really, really good strength in the opposite direction. So that means you see it going down and the volume going up, that means it's going to continue going down. It's going to continue getting stronger and stronger until they find its support or resistance, right? Another thing we look at is the market cap. It shows you the value of the company. Apple's market cap is 2.2 trillion right here, right? They get this number by multiplying the price of the stock times the volume, basically the number of outstanding shares, right? And the market cap, the higher the market cap, the more valuable the company is. I mean, if somebody has $2.2 trillion, I don't see them going bankrupt anytime soon, basically. So, and that's one way to only lose in the stock market is if a company goes bankrupt, you lose all your money. That's a wrap, right? But Apple's at 2.2 trillion. I don't see them going to zero anytime soon. Another thing I look at is price to earnings ratio, which I was talking about earlier. It ranges between 20 and 25, right? A low price to income ratio is really good. It shows growth in the company, meaning that their money, they're probably making more money than their stock prices actually that actually is. And if a stock price to income ratio is, let's say, 25 or 30, right? That means that their stock price is really high, but the money they're making is not enough to suffice for what the stock price is, and it's most likely to revalue and come back down. Okay, and then right now when we look at Apple's in the 22 range, meaning it's average. I mean, it's numbers that it's making money, it's keeping up with that stock price, so it's pretty good ratio, meaning it's average. You shouldn't have to worry about it, right? All right, so that's just a little glimpse of like a ticker that you would look at. There's also, open bid ask days range. I can go on and on and on about that, but I won't take up too much of your time here. So moving forward, I'm gonna also this is a Bitcoin ticker here. This is a coinmarketcap.com. If I want to look at a price of any coin, you go here and you basically see everything you need to know. There's a market cap, there's a volume, and there's a circulating supply. There's even a chart and also other information that you can use to find out the information you need to know. Now, the difference between crypto is that circulating supply is kind of like important, because if you don't have, if you have let's say a small amount of coins, your price is going to be worth more. And let me make an analogy to that. Let's say if they come out with a pair of Jordans, right? And they only release 5 pair of Jordans. Let's say one in random 5 states: Texas, Louisiana, Georgia, New York, and let's say Philly, right? There's 1 pair. So you know how much this shoe is going to cost, because there's only 5 pair print like ever made. Same thing here with Bitcoin and coin market cap. If there's an unlimited supply of coins, it's not going to be as valuable because they could just easily just make it, right? Bitcoin has a market cap, meaning once it hits this cap, nobody really can get in a sense. You can't buy a whole Bitcoin in a sense. And they would have to farm more or make more in order for them to like increase it. But if they did that, the price would go down. Okay. Here's a Forex reference. This is not necessarily a ticker website, but I did want to show y'all globalrates.com and kind of how Forex works, right? So Forex is basically you invest in an economy, right? So right here, let's give you an example. In Forex, you may see an economy says the ticker of the actual thing you invest in may say the US, it may be USD JPY, meaning you're betting that the US currency is going to that the US you betting opposites of each other. So America versus Japan, right? And what you want to do here is that you really want to find out where the banks are investing their money, because this is also currency, right? The banks the banks print, they keep currency, right? So wherever they're investing their money at is most likely where the chart is going to go. And what I mean by that is, let's say this is interest rates. So if a bank was going to invest in something, or let's say you bought a credit card, or you got a credit card, you got a proof for a credit card, two of them. The first credit card has an interest rate of 34%. The second credit card has an interest rate of 3%. Which credit card are you going to take? 9 times out of 10, you're going to take that 3% interest rate, right? You're going to take it all day, right? Same thing with the banks. If there's a currency with a high interest rate, they're going to go with the other currency because they're going to make more without being taxed on it, right? So for instance, let's look at the American interest rate is at 1% and a Japanese interest rate is at a negative 10%, meaning that they don't even have an interest rate there. So obviously the banks are, for right now, the banks are gonna like favor the Japan currency. So if you was to look at this chart, you probably see a downtrend because the Japan currency is winning against the US currency at the moment, right? And that's only because the interest rates are high and the banks are making more money on the way down than on the way up. Simple as put. It doesn't stay like this. You see this change row right here. The dates always change. The interest rates change at a quick of a dime. So I keep this up, refresh the page at all times to see where the banks are trading at for the day. And that way it gives me a jump on the market, because if I see some type of market action, I could say, oh no, they trying to fake me out, because I know that the banks are with the Japan currency. So Japanese candlesticks, these are your true indicators. On a bunch of charts, once you get into trading and once you get, because this is really a brief overview, I'm not really going into detail here, but there's going to be indicators. You can find a Fibonacci indicator, RSI, all these type of different indicators that can show you where the market is going. But the best one ever is the Japanese candlesticks, and I'll get into those in just a second. But I say it's a true indicator because it actually shows you market action. It shows you the buyers versus the sellers, and that's the best. That's really all you need, right? Learning candlesticks puts you above the average trader because they may just be buying and selling, right? But if you actually know what's going on in the market, if you can look at a candlestick and be like, okay, this is about to like go crazy, just from the market fluidity, right? If you can look at that and say this, you basically above the average trader, because most people don't even know how to read candlesticks or how to read charts. Candlesticks can be used in everything. That's why I love them as well. They can be used in crypto, stocks, options, forex, except NFTs. NFTs is digital art. That's a whole different ball game. But when you're looking at a chart, if it has red and green candlesticks, you can honestly just read it and find out what the market is doing. Japanese candlesticks, people use it in day trading or holding long positions. You can look at a month chart. You can look at a day chart. You can look at a 1 minute chart, and you can look at the different candlesticks and how they're moving, and you can kind of put your strategy together, or however you want to do it. And this is an example of a Japanese candlestick. There's a red one, a bearish candle. A bearish candle is, anytime you hear bearish in the market for my newcomers, bearish means going down. That means that you see a chart, just imagine a chart just going down. That's a bearish market, and the opposite with bullish. Bullish is a market that's going upwards, right? So in this dance we have here, they call it the bulls versus the bears for a good reason. The bulls are always going against the bears. You always see a formation of red and green candlesticks of people buying and selling at will, right? Some people are buying and then selling to get their profit. Same here. But there's candlestick formations that you can learn that'll give you an edge over the market, believe it or not. A lot of people think this, like, it's really astounding how you can look at something and just kind of predict. I've been able to do this multiple times, right? So in here, we see that same candlestick formation we see in here, right? This is called a bullish engulfing candle, meaning that this candlestick engulfs this little one here, and it gaps a little bit lower than this one. It doesn't have to necessarily be perfect, but you get the point. So in here, you notice that there's a bullish engulfing candle. You see a bearish market, a bullish engulfing candle prints, and then the market reverses. Now, say for instance, you know about bullish engulfing candlesticks and this prints on the market chart, right? Then you know for a fact, well, it's not 100%, but it's a really high percentage that this market is going to reverse and go the other way. And it's perfect time to buy, right? Because you're all the way at the bottom here and you're going to be buying to go all the way up to the top. And then you can sell for your position, make your profit. Same old song and dance, right? So next thing I want to get into, is it worth investing in today's market? So we all know that there's inflation going on. It's currently right now in a bear market. There's increased interest rates in the US. You just saw that, right? There's been a prolonged bull market, meaning that since we've released those stimmy checks, the market has been going up, right? It hasn't fell since. There's also an oil crisis and talks of a recession. So is it worth investing in today's market? A lot of people would see all that and say, no, market might crash, market might, no, the answer is yes. It is very important that you invest in today's market. Why? Because statistically, ever since the beginning of people trading, there has been it's been shown that every time that there's a market crash or there's a market pullback, it's always going to recover. Normally, you see a 20, 30, maybe 40% decrease, right, in your portfolio. And if you buy more stocks or if you buy and hold more, then when the market recovers, you're going to get 100, 200, 300% ROI. ROI means return on investment. But you're going to see that return and you're going to basically be good because guess what? If you see your numbers falling, like right now, my portfolio is in the 30%, is negative 30% right now. If I sell my assets right now, I end up losing, right? And let's say another year from now, the market recovers and reaches new market highs. That means I just missed out on 200% of profits just because I was impatient, or just because the market is where it is right now. So don't get that messed up. Matter of fact, even if you're a new trader here, the best thing you can do, everything is dirt cheap right now as far as the market goes. The market is very dirt cheap. Everything that I bought is like basically almost, I wouldn't say half the, it's like a third of a price down. So if I was to tell you, hey man, these Jordans are on sale for $100, or this PS5 is on sale for $200, you will jump on it, right? So if I tell you that the market is on sale, jump on it. Like you won't regret it maybe 2-3 years from now, promise. And with that being said, if there's any more questions, if you want to dive deeper into what I've just talked about today, if you're interested in trading, you can follow Trade Life on Instagram. You can DM me there. If some odd reason I don't get back to you, you can contact Be Well. Also, if there's, if you don't want to do any of those things, you can also look at YouTube, Investopedia books. You can literally teach yourself this information like I did, folks. And, that's literally all it is that it takes to trade. Practice, practice, practice. There are dummy accounts, meaning that paper trading accounts, meaning you don't even have to use real money to trade in a live market, right? You can use fake money and practice until you get your bearings together, right? So that's basically what I did to start off trading. I did a lot of research. I reached out to a lot of people and I basically became the trader who I am today. So peace, folks. Happy Juneteenth. Thank you, Cedric. Thank you, Be Well, for having me. Y'all have a good one.